Hey, hi, ladies and gentlemen. Welcome to the FSMOne webinar, and I'm Kevin Kao, research analyst from FSMOne Malaysia. So today is my pleasure to going to share with you our some of our insights and some brief sector outlook on what are the winners and losers of from this Malaysia budget 2023. So I'm pretty sure that everyone is aware about a few days ago, our finance minister he has just announced the Malaysian budget, and however, a few days later, our PM Ismail Sabri has announced the parliament dissolved. So as a result, you can see that FBM KLCI actually it's not only FBM KLCI is almost or the broad market for Malaysia market is hampered in the recent 2 days. So in this session, I'm going to share with you some of our insights and our outlook. So yeah, let's start our presentation today. Well, before I start to share some thoughts on the sector outlook, let me start my presentation with some of the market review. So as you can see from the chart on the left-hand side, most of the sectors has posted the losses year to date. So FBM KLCI has lost about negative 11%, and finance is the only sector that recorded positive return year to date, which in line with our previous call in earlier this year, that we think that with the upcoming OPR and the normalization and economic on normalization, the financial sector will be benefit from this. While surprisingly, technology has been a tough year for technology because of the demand slowdown and heightened geopolitical tension. As you can see in the recent 2 days ago, US and China, they have this kind of they halt the semicon issues. Then, well, healthcare, I'm pretty sure you guys also aware that healthcare mostly the decline was dragged by the glove stock. While on the other side, of actually the pharmaceutical and the hospital sector are still remain resilient compared to the glove stock. So while why I want to emphasize this is because actually, despite of the sector's posted losses in terms of share price, you look at economic data on the right-hand side. Our real GDP on the quarter two 2022 recorded 8.9% growth rate, which is very impressive growth rate. While our inflation, although it has a slight uptick from around 3% to 4.7%, and is already beyond our BNM target, which is around 2 to 4%. So our unemployment also remain healthy at 3.7%, and exports has registered an impressive growth of 10.4% as of July 2022. So I think that the main contributor for our exports growth mainly comes from the weakening ringgit Malaysia, and of course a lot of geopolitical tightening that geopolitical tension that as Malaysia, we don't have this kind of tension, this kind of geopolitical tension. While for OPR, we also seen that Bank Negara Malaysia has announced 3 OPR hike this year, and it's reached for 2.5% as of this month, which is October 2022. Now, moving forward, we think that OPR hike will continue, is likely to continue, and we think that 3%, 2.75% at end of this year, with one more MPC statement, which is next month, and as of and until next year first half, we think that 2 more hikes is going to occur in the next year first half. So accumulated is total about three times rate hike to a 3.25% OPR rate. Well, just like I talk about, it's been a tough year globally, and actually you can look on regional peers. Although the FBM KLCI has declined by 10%, while if you look at the regional peers, S&P, Hang Seng, China, even Euro, actually they are declined more than us. While actually you can look at SET, which is Thailand, STI is Singapore, and JCI. Actually, the drawdown is not so severe compared with those large players among global peers. So why JCI index has recorded a positive performance, and also SET has a lesser drawdown is because of some of their main constituents come from the energy sector, which are which are beneficiary from this earlier this year, the soaring commodities prices. Well, maybe you ask me, if Malaysia, we also net commodity exporter, why our share price declined by 10%? Well, I gotta tell you here is our oil and gas players, most of them are service providers instead of the upstream, those E&P, as known as the exploration and production players. So that's why technically we are not a direct beneficiary from the soaring oil prices. Yeah, as such, because of the macro backdrop, and of course, if you're aware that recently the political uncertainties, that's why FVN KLCI has declined by 10% this year. Well, some newspaper, they always talk about global currencies are facing pressure. Ringgit Malaysia is facing pressures. Well, actually, you look at compared to global peers, actually Ringgit Malaysia, the decline of Ringgit Malaysia is not that severe compared to global peers. So the drawdown for Ringgit Malaysia is mainly due to the higher DXY index, as known as the dollar index. So in terms of relatively, definitely Ringgit Malaysia is weakened against USD, and that's why you can see that our Ringgit Malaysia has depreciating since earlier this year for around 4.3 to recently at the 4.6. Well, after the slight market outlook, I'm going to talk about what's the implication for this time around budget 2023. Well, this time around is an all-time high budget allocation, which recorded 372.3 billion ringgit Malaysia compared to last year 332 ringgit billion Malaysia. So this time around, you can notice that it has a higher allocation in development expenditure, but yeah, it's normal that because operating expenditure has always been the largest portion among the budget. The budget. Well, this time around, we can see a huge decline in terms of COVID-19 fund, which only 5 billion because of followed by the economic normalization. Well, the fiscal deficit this time of 99 billion, which is about negative 5.5% of total GDP. We think that is a positive development to bring in much needed comfort for investors. So if you're aware that in the last few years, especially since 2020, because of COVID-19, our government have pumped in a lot of money to the economy, and it resulted a slightly higher fiscal deficit, which you can see in the chart on the left-hand side, 6.2%, 6.4%, and after that, 5.8%. And now with the budget of 2023, it's recorded a negative 5.5%, which we think that is a positive development in terms of credit rating agencies and or equities investors. Well, this time around, the budget there has a slight decline from previous year real expenditure. So actually, as just now I mentioned, last year actually their forecasted expenditure is around 330 billion, while the real expenditure as of now is about 385 billion, which is because of the unprecedented lockdowns and overheating inflation, a lot of macro backdrop that resulted our government have further pumping more money into the economy, and that resulted a higher expenditure. But glad to know that in a budget 23, followed by the budget 2023 announcement, they have a slight decline from the previous year expenditure, which is about 372.3 billion. Well, sorry. Well, this time around, we can see that the higher development expenditure to align with a 12 Malaysia target, 12 Malaysia plan development target. So if you're aware that actually our 12 Malaysia plan development target is start from 2021 until 2025. While the unprecedented COVID has impacted a lot, especially it caused a lot of supply chain bottlenecks, a lot of disruptions, a lot of lockdowns in Malaysia, and as a result, it affected our development target. So actually, just before this budget was announced, the markets was really expecting a higher development expenditure this time, and yeah, the fact is this time is the record high development expenditure, which about 95 billion, while the operating expenditure has fell to 272 billion ringgit Malaysia. Yet it's still a higher allocation, but we think that Although overall it might be not the best outcome, but we think that actually it's already a positive signal for us. Well, this time around the budget, if you want me to conclude the budget in a one sentence, I would say that no major surprise that could bring a material impact. If you are following a budget, a government this time they have a motto which is 3R: responsible, responsive, and reformist. So last year our budget has made a huge surprise in terms of corporate earnings, which is, as you know, Cukai Makmur is a prosperity tax, one of prosperity tax, which actually this kind of taxes is negatively impact to the economy. While this year around we can see that the government has announced several goodies, tax deduction, and a lot of incentives to the public. So as followed by the widely anticipated budget 2023, widely anticipated GE15. We also call this budget as pre-election budget, as it distribute a lot of goodies to the public. So this year around budget size is a highest, and our foreign reserve has recorded around USD 106 billion. And I think that's all. Oh yeah, I'm gonna mention this, which is it's fortunately that our government has forecast a 3.5% to 3.7% unemployment rate, which is a relatively very healthy rate. While our inflation rate, they are targeting 2.8% to 3.3%. So if you ask me, will this inflation rate going to be sustained? I would think that it's quite hard to sustain at such a lower level, especially you can see when the macro got a lot of uncertainties. So we think that the inflation rate might be higher than the target, but it definitely will going to be lower compared to the global peers, as you can see, US, Euro, even what's it called, UK. So yeah, because of our government, actually they have a lot of incentives, and especially in most volatile items, food and transportation. Well, after I talk about the macro, I'm going to deep dive into a brief sector outlook on our thoughts and our insights on these Malaysia sectors. So we have a positive view on the auto and auto parts sectors, which is a car, relating to the car. So the announcement, a positive announcement from the government are including on the chart on this information on the left hand side, which including import and excise duty exemption, and income tax exemption for manufacturers of EV charging equipment, and approved permit exemption for EV, and green investment tax allowance. So from this, actually, we already hear that the government has intention to shift towards the green initiative from the traditional one. Yeah, of course, in terms of EV adoption, Malaysia is slightly slower compared to global peers. But at least we are seeing the government has this intention to shift towards EV adoption. Also, the tax breaks given to these EV companies will lead them to an e-mobility experience and cut their costs along the way. So as such, we have a favorable long-term view towards this EV sector. As such, we have a favorable long-term view towards EV sector amidst these supportive measures being rolled out by the government. However, in the near term, especially in the recent 1 to 2 years, we think that these efforts are likely to bolster the mass market of sales of EV in the near term, because it's a lot of financing and efforts needed. So in the long term, we hold a positive view on EV, but we are not likely to see a spike in the near term in terms of this EV market sales. Well, for the construction sector, actually this time around, we see no surprise because actually the government has they just reiterate those large scale projects that they announced previously. So from the left hand side, you can see actually this time around is positive in terms of development expenditure, which is at least 50% of this line is going to basic development project. Well, also they have announced some of the new development, including a flood mitigation, repair and maintenance of assets, and transport infrastructure in East Malaysia. However, we still need more clarification on this ongoing large-scale project, including an MRT3 or other like East Coast Railing, Pan-Borneo Highway. Well, from this construction development, we think that the small and mid-sized construction players could gain some perks from it, while we remain somewhat cautiously positive view for large-scale players, and as we think that there is no new mega infrastructure projects were announced, while actually those things have already been priced in earlier. So as such, we remain a positive view, an overall positive view for construction sector. Well, for the consumer sector, I think that this sector is gonna be the biggest winners for this budget 2023 because of, you can see a lot of goodies, including income tax deduction, as usual, one-off cash allowance like Bantuan Keluarga Malaysia, and a lot of goodies I can say from government. So the higher cash allocation will serve as a strong tailwind for the consumer staple sector, and as such, we think that for consumer sectors, we prefer the consumer staples over discretionary players. Because that although this kind of cash allowance, incentives, tax deduction is good for the sector, but however, given that the macro backdrop and the higher inflation rate definitely is gonna to impact our spending on this kind of durables or luxury goods. So that's why we prefer consumer staples over discretionary players. Well, throughout the budget, we also heard that the government is going to give those development, those incentives, such as they will provide those lunch package and some food package to the rural area, and we think that this is going to be a benefit for these consumer staples players. Well, for the healthcare sector, actually for healthcare sector, we segregate into three sectors, which is glove, hospital, and pharmaceutical. So actually this time around for glove sector, there is no major announcement that could materially impact the sector. While from the government tones that they have an allocation of around 36.1 billion ringgit Malaysia, which will be used to procure medicines, refurbish the clinics, replace the new equipment. Basically, it's those infrastructure plays. So from this, we think that is good for the hospital players, especially the government's intention to promote Malaysia to as a medical tourism destination. Probably you guys were aware that Malaysia is somewhat one of the famous place for this kind of medical tourism for foreigners. So meanwhile, for the pharmaceutical players, could take advantage from budget announcement followed by a higher procurement of local medicines and extensions of tax incentives. Well, for financial sector, we are still neutral. We are still positive on it, but as this time around, I think there is no material impact from the budget 2023 to the financial sector. As you can aware that on the left hand side, the government has gives out a lot of discount loans. This, and one thing I want you guys to take note is that the government has probably you guys have heard about a lot of fraud cases and a lot of things related to the cyber security. So the government has encouraged more collaboration to curb the fraud activities and enhance cyber security, and we think that this effort is going to more or less impact the operating expenses from bank as they need to enhance their current system. However, with a higher OPR rate, we think that this thing's going to be offset by a higher net interest margin. And I think that from this budget 23, the best news for financial sector is the discontinuation of prosperity tax, which is the government has they didn't mention about this prosperity tax because if you're aware that banks usually they have a very high earnings and their impact gonna be impacted by this kind of prosperity tax. So even if the government has slower economic forecasted growth around 4% to 5%, with this discontinuation of prosperity tax, and higher OPR rate. We are still positive on the financial sector. While M-rates, actually this time around, we don't see a huge things that related to M-rates. So as you can see on the left-hand side, is the government has higher allocation in order to boost the tourism, domestic tourism. Well, M-rates, just for your information, the Malaysia M-rates, we have a huge portion in office risk and hospitality risk. So we still remain optimistic about the M-rates, which has a high exposure to office and office rate. And office rate can be benefits from the this now I've mentioned about the lower employment rate, and the hospitality risk, including you can see malls, these tourist those places with tourists typically went. So given a we expect higher footfall levels in both places and the government assistance in tourism sector. So as such, we think that risk is probably still a good defensive play for investors who want to seek for a more stable and resilient play in their portfolio. Well, for technology sector, the government has announced quite a good news for technology sector, including the creation of special fund of over 1 billion ringgit Malaysia, with stated aim of attracting a high value added investments in domestic E&E sector, and Khazanah allocation for Dana Impact to be invested in domestic high-tech companies, and especially the extension of tax incentives. So we believe that from this kind of positive news for technology sector, definitely it will positively impact their corporate earnings. And as such, we are upbeat on the volume growth for this sector over the coming years on the back of structural demand growth from areas such as EVs, AI, cloud computing, and 5G. So if you guys are aware that actually tech sector has been a tough year in terms of share prices, but actually if you look at the earnings forecast for Malaysia tech sector, actually we are still on a very healthy path. So that's why I'm going to take this chance and reiterate our positive stance on the tech sector despite the global turbulence, that Malaysia domestic tech sector is still you can still consider some of your portfolio allocation in this growth-oriented tech sector. While telco sector, as widely anticipated, there is no significant announcement that could impact earnings in budget 23. Well, the telco sector, under the phase 2 of Jendela, the government is targeting 100% internet coverage in the populated areas, while DNB, which they are focused on the 5G, will expand the rollout to the entire nation, targeting 70% coverage. Well, actually this time around, for telco sectors, we think that a budget has not really a material impact to these sectors. While the other things that could have material impacts is the agreement of in terms of 5G for those telco giants. Yeah, if they're going to have a more clarification on this 5G agreement, that only being a very material impact to this sector. So as a conclusion, we are still positive on telco sector, given that Malaysia 5G rollout, we still have tons of spaces to grow, and actually we are already a laggard compared with ASEAN peers. As you can see, Indonesia, Singapore, we are actually lag behind them already. So I believe that with more clarification from the authorities, a long-term outlook for telco sector in Malaysia is still positive. While property sector is also one of the winners in this budget 2023. Why I say property sector is a winner is because actually before this budget 2023 announcement, the market is really expecting this stamp duty exemption is going to diminish, and it could be impacted the property sector's sales. So even know that actually this year around, property sector has also recorded lower sales. So we are constantly positive viewing the property sector, given a residential overhang, workers shortage issues, and high raw material costs that cloud the near-term outlook. So actually this time around, this good news could offset the negative news that I mentioned just now, and is expected to have a mild impact on the overall local property market. Also, we prefer, among property players, we prefer low gear township developers. We have a low gear, meaning that you have a lower gearing ratio, which is the lower debt, which exposure in both landed residential and industrial property segments. While for transport and logistics sector, we can see that as the government extended grants for tourism promotional incentives, we see aviation sector as the beneficiary of the fiscal aid to upgrade the tourism infrastructure. However, we are still cautiously positive on this sector as it still requires more clarifications from China's opening, which is one of the largest tourism group to boost the domestic tourism sector. I'm pretty sure you guys know that this is around China due to the zero COVID policy. As of today, we still don't see a very clear instruction from China's authorities that when they're gonna abolish this kind of policies, and when the tourists from China is going to boost our domestic tourism sector. Well, after talk about all the positive, now we're going to enter some of these negative news. So from oil and gas sector, we hold a short-term positive, however, long-term negative view for this sector. This time around, there is no special announcement. The only announcement related to oil and gas sector is a special status for Penang for chemical and petrochem industries investment incentives, and the PetroNews to contribute 2 billion ringgit Kwan in 2023. Well, from the government intention to shift towards green initiatives, as you can see just now, government is pushing our EV sector by introducing more incentives for EV charging station and renewable energy. We think that in the long term, definitely align with ESG and United Nations sustainable goals. Evidently, the process of shifting away from the traditional fuels into renewable energy as unavoidable. And also for oil and gas sector, for Malaysia oil and gas sector, we are not the direct beneficiaries, as I've mentioned in the earlier presentation. We are not the direct beneficiary from oil prices. So domestic oil and gas players, except for the Hibiscus, which is one of the EMP players. So most of the domestic oil and gas players, they are impacted by the Petronas, which is one of their largest customer contract that provided by Petronas. So as such, we think that in the short term, domestic oil and gas sector could be buoyed from the higher from oil prices. However, in terms of long term, we still hold a negative view from this sector. Well, from this kind of sin stocks as well as alcohol and tobacco, although the government has increased task force on cigarette and alcohol smuggling activities, it is a good news in terms of near term for these kind of sectors. However, the other announcement, which is import duty and sales tax exemption for nicotine replacement therapy, which I think is a bad news for this sector in the long term because of the government's unfavorable tone towards this stock by gradually imposing limitations. Throughout the years, we have heard of a lot of negative news in terms of some of the politicians, they want to increase the tax for this kind of sector, and our health minister, Mr. Khairy, has also announced that he might want to abolish this cigarette in the long term. So we hold a negative view on this sector in tandem with the worldwide ESG adoption and long-term government initiatives. Well, plantation sector, which is one of the largest players in FBM KLCI, this time around, it actually is one of the losers from this budget 2023. Is because although the government has announced several good news for the small players, we still don't see a considerable impact from these measures on domestic large cap palm oil plantation players. Well, also not to mention that the government has continued the multi-tiered levy for foreign workers by 2023. So what actually is a multi-tiered levy is the companies with higher number of foreign workers, especially for those capital intensive sector, will be subjected to a higher worker levy. And although the government has mentioned that this higher levy will allocated to the automation staff, however, we think that definitely the damage is there already in the near term, But in terms of the switch to the automation, we still need some time to realize the benefits from the automation stuff. So as such, we come up with a negative view because our positive impact on earnings from automation is unrealizable in near term. Yeah, for the market review, I also want to mention that I'm pretty sure everyone knows Parliament has dissolved yesterday, and in the next 58 days, our election commission is going to announce the nomination and polling dates. So this time around, compared to last time when Barisan Nasional and Pakatan Harapan has a head-to-head fight, we think that this time around, in terms of G15, we're gonna see a lot of uncertainties, as 222 parliamentary seats and 116 state assembly seats in BN control states of Perlis, Perak, and Pahang are up for grabs. So as of at least just now, we still don't see the news that those states that are governed by the Pakatan Harapan or PN is going to dissolve their state assembly seats. So we expect the market to be cautious to polling day, given that the G15's uncertainties. Well, after this kind of negative news, I'm gonna tell you some positive news now. Actually, although you see that FBM KLCI has reached a very, very low level, and probably you have heard a lot of your friends, your relatives as negative thoughts on the FBM KLCI. However, the data is tell us that year to date, we are seeing a net positive flow, which is about 1.6k million ringgit to Malaysia equities market. Just in the recent quarters, you can see a lot of red color there, which is net outflow from foreign. However, in terms of net inflow year to date, Malaysia is still a positive place for foreign investors. And the outflow from Malaysia recently is definitely because of the political uncertainties, rising interest rate, especially from the developed market, this kind of external noises. So in terms of fundamental, Malaysia is still intact. As you can see from this, earnings is not reflected on the share price for FBM KLCI index. So on the chart, is showing you the white line is showing the price for FBM KLCI index, while the blue line is showing the forecasted earnings per share, which is you can know it as the earnings for the corporate. Well, actually, it's really in line throughout the year, throughout the last 5 years, and except for 2022 and around 2022 and 2021 is because of the unprecedented COVID-19. But actually, before that, you can see that it is very correlated. However, in the recent months, we see the corporate earnings still remain high, but our share price not really reflect in terms of the corporate earnings. So why this happened is because of the external market noises. As such, we think that it is a pretty well chance for you guys to probably take a look on the FBM KLCI index on the Malaysian equities, as although the share price has dampened, but our earnings is still there. So we always encourage investors to time in the market instead of timing the market, because you never predict what happened to the market. Maybe tomorrow some negative news from US, some positive news from China. You're not gonna know about this, but what you can do is remain on the fundamental, focus on the fundamental, because eventually the corporate earnings are the ones who reflect on the share price, as proof by the history. As you can see in the last few years, is really in line in terms of earnings and share prices. Well, last but not the least, I'm going to talk about valuation for FBM KLCI. From chart on the left hand side, you can see that there are 3 lines there which represent average standard deviation and +1 standard deviation and -1 standard deviation. So how we read this chart is in statistics we have one of theories called as central limit theorem. It means that eventually this data we are going to normalize in certain band. So from the recent sell-off, we already see FBM KLCI index is a very extremely cheap valuation in a recent months. While the data on the right-hand side has proven that actually our earnings per share is still growing healthy, despite the recent sell-off in terms of share prices. However, in the near term, the risk of our bullish call included but not limited to higher than expected Bank of Malaysia hawkish stance, the uncertainty of spillover effect from the global uncertainties, and unexpected full-blown war, either in US, China, or Russia, to disrupt global economies. So this chart is an illustration about what I mentioned just now. We are seeing the lowest PE valuation ever. So the last time when the PE valuation at such a low level is around 2011, which is because of the tapering tantrum. And as you can see, most of the time the share prices are hovering around the band, which is aligned with just now the central limit theorem, where the data eventually they will go back to a normalize it. So as you can see, the valuation is so cheap now, so probably it's one of the best time to relook at these Malaysian equities. So this is my takeaways from the budget 2023. Overall, this has been an expansionary budget that has a more pros and cons. Well, although in terms of share prices, Malaysia has not really been performing well, but our economic data, including the net exports and foreign direct investment, is a solid indicator to show you that Malaysia is still a good place to invest. Well, also, the foreign fund inflow amounting 1.5k million ringgit Malaysia is a testament to the strong buying interest of foreign investors to domestic equity market. However, definitely a near-term volatility persists especially in Q4 as political uncertainties came in. So in conclusion, we maintain a 3.5-star attractive for Malaysian equities. So that's all for my presentation. So we'll move into Q&A session now. Okay, so I will read this question out and I will answer it accordingly. So the first question, how low is the ringgit expected to depreciate against the USD? Well, definitely ringgit Malaysia, if you follow our website closely, actually last week we have published an article to talk about our thoughts on this depreciating ringgit Malaysia. Well, we do not deny the fact that our interest rate differential between Bank of Malaysia and the Fed is going to be widened. However, we are seeing the Bank of Malaysia is starting to pick up interest rate. So I will give you an illustration of this. When you are driving a car, you want to reach your destination faster, but you won't exceed your speed limit by driving too fast because it will cause you some danger. So that's actually the similar situation with Bank of Malaysia. In terms of overall economy, definitely Bank of Malaysia is going to raise their interest rate to cope with US interest rate to in terms of to cope with the US Fed rate. Is because if the Bank of Malaysia they still remain interest rate, definitely Malaysia equities, Malaysia bonds is not going to be attractive, and in the long term it's gonna erode your consumer spending. So that's why Bank of Malaysia has already raising their interest rate, but on a very, very gradual pace. So if you're aware, in the recent months, the Bank of Malaysia has raised interest rate by 3 times with 25 basis points each time, while US Fed has already raised by a very, very hawkish stance with around 75 basis points. So that's a huge difference between Bank of Malaysia and USD. So if you ask me, will US Fed stop their such a very aggressive stance? I would say yes, it is. It's because that if you follow the news recently, the supply chain pressure from globally has already declining, and of course, if you look at the inflation, basically inflation, we have 2 major categories, which is one is named as those most volatile items, including food and fuels. While the second thing is we look at the services, which is the true things that how the service sector react to the inflation. Well, recently with the easing of a not I will use the word easing in terms of geopolitical tension from compared to earlier this year and easing of bottlenecks, we are already seeing a decline in terms of food prices and a few I mean that these major commodities. So as such, I would think that the U.S. inflation we has already passed through the peak. So definitely, U.S. Fed is going to have take a relook at their hawkish stand. So in conclusion, we think that ringgit Malaysia is likely to we are already seeing the peak relative to USD. So the second question is Harta a good buy now? I'm going to apologize here that I couldn't give you a specific stock advice because of a regulatory reason, but I can give you a recommendation in terms of sector. Well, in terms of glove sector, definitely in terms of valuation, glove sector has been so cheap that it's a level that you never seen it before. However, the glove sector, you know, because of a decline is due to the ASP issue, average selling price issue, and is last time around Malaysia is famous with the glove, but nowadays after the COVID-19 pandemic, we are seeing more supply coming in from Thailand, from even China. So that's why in the near term we think that a glove sector hasn't have a really strong catalyst to boost this sector. So I would say that we hold still a neutral view for this sector. Well, on the third question, if there is a change of government after the general election, the budget is not valid anymore, right? I will say yes and no for this question. So we have a three base case scenario, which is the first one, if the UMNO-led Barisan Nasional has win this budget this general election, and the second one, the UMNO win this election. However, it has a less majority, so we're gonna see a more political coalition with UMNO and rather like a PN and even PAS. So and the third chance and the third scenario is the Pakatan Harapan is going to win this general election with majority seats. So in the first two scenario, I would say that the budget is not valid anymore. Is theoretical, yes, but in terms of drafting this budget, you're gonna put a lot of efforts. And if the first two scenario apply, we think that it maybe have a minor changes, but in terms of overall, the budget is still applicable. So the fourth question on oil and petrol, can you elaborate on the timeline where you state you are positive short term and negative long term? Well, in a positive short term is with the geopolitical tension that you're seeing nowadays. Definitely, energy security is one of the crucial issues for the governments to take a look at. So you can see in the near term, especially when we still don't have more clarification from the governments in terms of from every government, we still need more clarification from them. So at least in the near term, I mean that in a recent 1 year, maybe definitely in the short term, inflation is going to be persist and commodities price going to be at its higher level. However, if you ask me, have we passed through the peak? I would say, yeah, we already passed through a peak and commodities prices likely to remain at this current level. So yeah, negative long term, I've elaborated just now is in the long term, definitely the traditional fuels is no longer be applicable as because if you're aware that we are already passed through few times of industrial revolution. So if you ask someone who born maybe 100 years ago, can you think that one day around we can have this Zoom meeting that I can speak with you without face-to-face interaction? Definitely the people will say, oh, hell no, it's an impossible thing. But that's what the technological innovation is. So in the long term, EV is definitely going to come in and replace our current traditional this kind of traditional fuels. So that's why we are hold negative long term for this oil and gas segment. Well, the next question: what sector or fund considered as undervalued? Actually, this is a very subjective question. Well, if you ask me what sector or fund considered as undervalued, or for fund, probably I couldn't answer you that is because it depends on your personal judgment. While for sector, I would think that currently most of the sectors in Malaysia is still undervalued. Is because that the earnings hasn't really been reflected on the share price. You can see actually this year around technology sector, I've given some example, those big players, Inari, MPI, they are still registered a good performance. But however, if you look at the share price, actually it's not really performing well. And of course, if you look at the others, if you look at other sector like financial, yeah, it's recording a good performance, and everybody is expecting the banks are gonna be benefits from the rising interest rate. However, year to date, it only increased by 2%. So Malaysia, we are a relatively small country compared to these big players, China, US. So technically, we are really correlated with this macro backdrop. So I would say that if you position well during this kind of this kind of this kind of situation, negative environment, definitely the good when the good news come, Malaysia gonna rebound at a very strong pace. So the next question: tech sector can accumulate now. Should see how the Nasdaq performs. Well, tech sectors this year, it's a tough year for tech sector, is because earlier this year we're already seeing a supply chain disruptions. After that, inventory accumulation. Then even after that, recent days we see US-China tensions with causing this negative news for semicon sector. While for domestic Malaysia tech sector, we are comprising a lot of OSAT, which is packaging and downstream for semicon. So tech sector can accumulate now. I would recommend you to take a look at those specific tech players that have a good earnings and a good fundamental prospects. I would recommend you not to touch on this, not to consider this those tech players that they are still don't have a very strong fundamental, while they are just playing around with their story. So now in terms of stock selection, definitely it's not applicable, not only applicable for tech sector, it's for every sector. We encourage investors to look at the real earnings compared to the future story. So let me give you an example. The banks, they are already gaining a real earnings, while if you say maybe banks in the future they're gonna adopt a cryptocurrency, they're gonna adopt some special things, some very fancy things. So compared with these two banks, I would recommend you to consider the first banks, which they at least at this juncture they really secure the earnings, because nowadays, especially this year, we have seen a lot of volatility and uncertainties. So probably we're gonna recommend you to take an overall defensive stance while seeking for this tactical allocation to gain this rebound from the recent trough. So for the next question, for the woman returning to work, is it really be 5 years tax exemption or just 1 year tax exemption like budget 2020? So basically this one, sorry that I've got no idea for you, but because actually after this budget announcement, it's still not a fact yet, as this budget is going to be discussed in the parliament, while we already seen the parliament has been dissolved in the recent recent couple of days. So that's why it highly depends on the outcome from the upcoming GE 15. So yeah, that's my question. Well, how about bonds recommended at this juncture in view of the rising interest rate environment? Well, bonds is a very unique market compared to equities. For bonds, if you ask me, I would recommend you to take a look at the long-term bonds in terms of short duration bonds. So what I'm going to say so is, I will give an example of an MGS yield. So MGS yield, if you look at a 3-year MGS yield, is posted around 3.9% MGS yield. While if you look at a 10-year, it's about 4.1. Yeah, it's around there. You have never seen such high yield in the recent years. If not mistaken, the last time we have seen this kind of high yield is around 2011 and 2018. And even back then before is during the Asian financial crisis, 1997. So with the so interesting bond yield, we think that if you are able to lock in this such interesting yield in the long term, definitely is good for you to accumulate your wealth in terms of income play. So my recommendation for you would be holding a long-term bond to lock in the current attractive yield compared to short duration. However, if you want to play a very aggressive stance to take advantage in this kind of volatility, you could go for a short duration bond, while an aggressive way in terms of equity. Short duration bonds meaning that you are protecting yourself by securing such an attractive yield, but you are also accumulating your wealth to go in those aggressive equities. But this kind of tactic is definitely more riskier for you, and ultimately it depends on your risk appetite. So if you have any question, feel free to ask our CIS members and of course our research. We are very welcome to help you. So the next question: do you think increase in interest rate is going to reduce inflation, since the current inflation is caused by supply side, not demand? Okay, that's a very interesting question that actually a lot of people has asked me about this. So in terms of theory, definitely increasing interest rate is going to reduce inflation. But if the inflation is the demand inflation, so currently the inflation is caused by supply side. I will partially agree with your statement now. So actually this time around, I will take US as example. As I mentioned, US inflation is caused by food and fuel in the recent month. However, you can see that actually the service inflation has starting to pick up. It's because that the tight labor market and the slow unemployment rate. So definitely these central banks, they're gonna increase their interest rate. It's not only because of the economic stance. What I say economic stance is they have two aims to reduce the inflation rate. One is by the economic stance, which is the increased interest rate. They have this kind of monetary tightening policies. They can control their buying, this kind of economic stance. While the other hand is they want to signal investors that this is their stance, and you don't buy this kind of financial assets anymore. It's because when investors keep going in, definitely inflation is not going to be in control in the near term. So that's why the Fed, they has always reiterate their stance to curb the inflation rate, and giving a signal to investors that, oh, please don't come here anymore. We are going to curb our inflation rate. Yeah. So I think that in overall, Asian central banks is likely to continue to rise the interest rate until the inflation is going to be controlled. However, in the near term, I would think that the inflation target from governments from these central banks is unrealizable, as actually at least in the near term, we don't think that the inflation is going to. Okay, so you see inflation already spiked in the recent months, and hold on, please give me a couple of seconds. I'm going to charge my laptop. Yeah, although you already see inflation has spiked, but we don't think that even after all these things has been resolved, we don't think that the inflation is gonna have this kind of steep curve going down moving forward. So our base case is inflation is definitely going to be calmed down. However, the higher inflation rate is here to persist, and we're gonna learn how to cope with this kind of high inflation rate environment. We do have an article talk about how to embrace with this kind of a high inflation rate environment. And if you are interested in it, feel free to visit to our website and have a look on our article to have understand on our thoughts. So the next question, the currency versus gold, which more consideration by fund manager? Sorry that I don't have an answer for this, is because actually what interesting on buying funds is you're gonna rely on the fund manager's decision, and that's an interesting part for buying a fund. So I would say that I have no question for this answer, so sorry for that. Well, last question is, how will a slowing growth of China economy affect us? Definitely, Malaysia is going to be affected by the slowing growth in China economy. If you notice that Malaysia trading partners. So Malaysia is a net exporter, and China is our top 3 trading partners throughout the time. Our top 3 trading partners is China, ASEAN, China, Singapore, and Thailand, all the way. So, and sometimes Australia is going to be in this list as well. Well, definitely with a slowing growth in China, let's say the demand is going to be sluggish, the consumption in China is declining. Definitely, it's gonna affect us because our Malaysia exports and for this kind of exports are manufacturing, including commodities, industrial players. We rely a lot on China. So yeah, we still need more clarification from one of the biggest economy in the world, China, to boost a catalyst for us to see a very strong rebound. So we hope that after in the next month, after the CCP Chinese Congress Party, with more clarification come in, Malaysia could boil the positive catalyst as well. So I think that's all for the Q&A. And I think I'm gonna pick up a few more questions from a chat box. Yeah, please give me a second. Well, one of the question is, what is the pros and cons to invest in ETF and unit trust, and any recommended of a US ETF? Well, for the second question, any recommended of US ETF, feel free to visit on our website. You can go to the ETF space, and we do have some of our ETF recommendation list. So how do you evaluate an ETF? Is because basically an ETF is just tracing the index. So the performance is highly reliant on the index. So how do you trace it? Is you look at the standard error, this standard deviation, and this tracking error, tracking differentiation, meaning that how close does this ETF tracking the index? Well, what is the pros and cons to invest in ETF versus unit trust funds? I'm gonna give you a very short answer here. This is not our topic today. What is the ETF? What is the pros and cons? So if you invest in a unit trust, you are relying on a fund manager performance. Well, ETF, you are relying on the index. A lot of people may argue that if you invest in an index, your performance may be good, may be better compared to the unit trust. I would say yes and no for the answer is, if you invest, let's say I will give an example. One of our recommended unit trusts this year, Gulf Tactical Fund, is this Malaysia Equity Fund. You take the fund performance compared to our Malaysia FBM KLCI. So definitely the fund is performing better compared to the index. While the other equity fund, FSMOne Equity Fund, that is also one of our recommended funds for Malaysia Equity. It also performing well compared to FBM KLCI. So why this happen is because that as an index, you're gonna accept all the constituents in the basket. While for the funds, it depends on the fund manager's view on a certain sectors is attractive, then he and she can overweight or underweight in certain segment. So ultimately, before you want to invest in a fund, we will always encourage you to have a have a study on what's the funds manager view on the certain segments. So if you are agree with the funds manager's view, definitely you can invest in the funds. While if you want to seek just for the index instead of the funds, for sure ETF is a better choice for you. Well, the next question, if the budget retable after election, then all the incentives given out for the sector might be different. So it is better to wait till then only to re-enter the market. Okay, yes, this is one of the questions that maybe you are trying to time the market. So as we always emphasize never time the market, is because you're not gonna you wouldn't know what's gonna happen. Even I also don't know who is going to be our PM next time and what's going to happen in the budget. So we as an analyst here, we are analyzed based on the indicators and our thoughts for this budget. So based on our research and our thoughts after our analysis, we think that it's unlikely for the new government, as based on the base case I mentioned just now, if you can recall, it's unlikely for the new government to redraft all these incentives and has a very huge changes for this kind of budget 23. So it's likely only have some minor changes. So for this budget 2023. Well, the next question. Does fund manager based on GDP and CPI on direction for investment? Ultimately, it depends on the fund manager discretion. So sorry that I don't have a question for you. But if you do have any queries, feel free to visit our website. Go to the fund and recommended fund. We do interview fund managers very often to know their thoughts on the market and their allocation. And of course, you can visit to our Facebook, our YouTube. We do have this kind of collaboration with fund houses to share their insights and share their funds to you guys to know more about the market. Well, with interest rate expected to rise, bond is still viable. I believe that this question I have already answered just now. It related to I would recommend you if we are very aggressive short duration bond and equity, and while if you are more income oriented, a long duration bond is viable for you. Well, okay, so these are I think it's the last two questions. Most equity funds are showing negative returns recently. What is your advice to retail investors now, and what to avoid and what to splurge on? Well, I do not deny the fact that this year is a tough year for equity, and most of the equity funds are showing a negative returns recently. Well, definitely in terms of invest in UT, you have one of the cons, which is you don't have very transparent data to know that what the fund manager doing. So before you invest in something, I would advise, it doesn't matter that it's ETF, it's UT, it's alternative, it's stock, bond. It doesn't matter what you invest is. You need to understand what the things you are invest in. It's not only applicable to you guys. It's one of the principles that my Sifu has already taught me where I enter this industry, and I always I maintain this principle. So definitely, if the things are declining and you understand what is your risk appetite and why the things is declining, then you can understand should you average down or should you quit. So let me give you an example. If you are buying a stock without knowing what it is, when the stock up by maybe 20%, let me give you an example, 20% in 3 months. So you got no idea why the stock suddenly spiked so much. Then you might think that, oh, maybe it will go up further, and you can wait for a few weeks on take profit. But however, in the next few days, the stock suddenly tumble down to maybe negative 20%. Then you will be panic. You'll be panic. Oh, what's going on? Why's the stock suddenly tumble so much? So that's why I always encourage you to understand investment before you go in. So I think that's all for my question. And next question, what the option fund for alternative investment? Okay, so alternative investment, we got a lot of things, including PE, commodities and even real estate and so on. So if you want to know more about alternative investment, you can go to our website, go to the fund selector, and we have some of the selection there. You can tick on the alternative investment, so it will appear some of the examples. So some of the examples including RHB Gold and General Fund, or RHB Pre-IPO Fund, and so on. Definitely, you can look at our website if you are interested. Okay. Okay. Well, I think that's all for the chat box question. Oh, I see I see one more question here. Okay, last question. KLCI has been one of the worst performers at least the last 5 years. Going forward, even the valuation is attractive, other countries or region should perform better. What is your take? Well, I do not deny the fact that KLCI is one of the worst performers. And if you look at Facebook, even some people thought that if you invest 10 years ago, you still record a negative returns nowadays. Yeah, I do agree with the fact that we are not performing well in the last 5 years is because of the political uncertainties, macro backdrop has impacted us a lot. Well, in terms of investment, we seek for the best investment that can give you the highest possible return instead of we seek for the good things to invest. So okay, so I will give you an example for like this. We know that some of the big tech players, Google, Apple, Amazon, these kind of big tech players, they are recording a very attractive return, and their corporate earnings is still resilient. So on a hindsight basis, definitely this kind of stock also tumble a lot because of macro backdrop. However, if we reverse the time to 1 year ago, so yeah, these kind of stocks, they have a very expensive valuation. And if you ask me, should I enter these kind of stocks? Although they are generating a very good earnings, but the valuation is expensive. So if you enter that time, nowadays you could suffer quite a huge losses. Well, KLCI, definitely in terms of the country's advantage, we are not we are worse than these these large nations, US, China, even some of our region peers, Indonesia, Singapore is suppressing us. So while the valuation for Malaysia FBM KLCI is still attractive, it's because it's already such a low level. If you buy in now, when the market is rebound, definitely the momentum of rebound is stronger than others peers. And that's the point that you are investing, because you want to generate higher return. So I guess that's all for my explanation. Thank you everyone for spending your time to listen to our thoughts and our insights on this budget 2023. As a Malaysia resident, definitely I will hope that Malaysia is going to be perform better, no matter in terms of equities, in terms of financial, or in terms of overall economy. So let's hope that with the upcoming result from the GE15, the Malaysia is going to be performing better. So I guess that's all for my presentation. Thank you everyone for your time. And yeah, that's all for my presentation. Thank you.